Wow. I thought so. I thought so. So the market has closed Friday, the 7th of October. What a slaughter. It was all, the market was just waiting for the NFP report. This move back up on Monday that caught everyone off guard because Friday's close was ugly, uglier than today's Friday's close, you could say. But anyway, nice little reversal, shorts cover, not too much. Some people believe in the bounce, the double bottom. I actually did at some point. We hit this first resistance point. I thought we might hit this second resistance point, but then we started to lose a bit of momentum. To be honest, after yesterday's candle, I thought maybe not. But to be honest, everyone knew that it was really Friday's number that would decide direction. I thought if the market digested that number and it was bullish, then it would hit second resistance, and then we'd have to see if we really break out of this downtrend line. I mean, overall, even if it did, you'd then have this greater strategic downtrend line, which I thought it would not break out of. But my suspicion was that the number would be interpreted poorly by the market. By that, I mean it would go down. The market price would go down. The stocks would go down, which is what happened. I thought that, good news could be bad news for the stock market because good news means the stock market can endure the rate increases. And maybe I did also think that even if it was, whether it's good news, the NFP, or bad news, I still thought stocks would go down. But I did have a suspicion that if it was good news, then the market would go down because it would say, oh, we can endure higher rates. And that's what happened ultimately. You can never really know what the number's going to be. I remember when I used to trade in London for my old company, we would always basically pay a pound. Everyone would take a pot guess at the number, and just random people would win from random guesses. I mean, I'm sure there are some people who can calculate it, but anyway, you never really know what the number's going to be. And in this case, the market went down. So very ugly close. I thought that the market could go 3%, maybe a little bit more, but not 4%. To be honest, we were almost pretty much at 4% on the Nasdaq here. But yeah, basically it was a 3% down day, if I can make that an average number. We're not at the lows, but you know, I think Monday we're just going to be there. We're going to be testing there. And I think a lot of people agree that we're just going to be going back down again. Now, I don't make my judgment based on what other people think, and usually most people are wrong. But in this case, I think they're right. My thesis was always that we're going to go lower. Even when I was thinking, we might get to first resistance or second resistance, I always said, but we're going to go lower. And now it looks like we're going lower even quicker. It's surprising how fast the market can go down. I mean, in this case, the market went up only for 2 days. I mean, I know there's 3 green days, but we didn't really venture that much higher. But look at these moves up and then very quick moves down. And I remember, was this the CPI day that it just went down? And that was when I was sure that we're going to lows. And that's what happened. And you have these sort of 1 or 2, 3, 4 days up, very strong, one day down, gaps down, opens much lower, closes low, and that's it. All these 3 or 4 days here in sort of early September, just totally reversed by one day. And that's what, you have this saying, you go the stairs up and then you take the elevator down. And that's what's happened. You get these big red days that just sort of make up for 3 or 4 green days. And that's what this candle was again today on news. And usually, and yeah, so my opinion is we're just going to sort of Monday test the all-time low, maybe close above it, I don't know. But basically, early next week, we're at new lows. And then it can get very ugly because there are different types of chart patterns. You can have a move down, which will then bounce and go back up. But this type of a move, where we've gone all the way up, basically come all the way back down pretty violently, a little bounce on the way, standard technical bear market rally, but basically come all the way back down, gone sideways a bit too long at the double bottom, flushed it, fake reverse it, like, oh my God, maybe we have an opportunity. And then bam, on news, with all the fundamentals behind us and everyone knows the background, for me, it's just, yeah, you might get 1 day sideways, but basically the market is saying, nah, we're going lower. We're going lower until rates stop increasing at this rate. Pun intended. Maybe if they slow the rate increase, maybe the market will reverse a little bit for a few days. I still, even if they say, okay, we're not going to do 75 basis points, we'll do 50, or they'll come out with something else, like every 2 months we'll do 75. I don't know. I think the market will be like, oh my God, yeah, let's bounce. This is great. But then it'll be like, yeah, but that means rates don't go down. They just go up slower. And rates where they are now is too much for the market. So even if that happened, I think we'd still go down medium term. So for me, we're just going lower until the Fed really pivots. We're going lower. It's for me, it's that simple. But I'm aware that we're going to have some bounces. That's why I get very detailed, zoomed in, and technical about it. But back of my mind, that's the fundamentals. So the trend is your friend. The trend is down, and here it's technically and fundamentally looking bearish. So that's not specific to the SPY. It's all the markets, and I'm not even going to bother going into too much into the SPY. I mean, compare the SPY to the Nasdaq, no difference. All right, no difference. Yeah, the Nasdaq was down 1% more, whatever. They're basically reaching their all-time low. What? Okay, Nasdaq was a bit weaker, already sort of testing its all-time low there. Dow Jones, a little bit more to go. What is it? 1%, 1.5, whatever. This is done in 1 day, one bad day, one horrible Monday morning. This is all done. The Russell, yeah, okay, maybe like before, the Russell will be not at new lows, whilst the other three will be. But whatever. At this point, the Russell will break new lows, and then they're all three breaking new lows, and then we can start looking at support. I don't think we need to look at that straight away. I think we can look at that on Monday once we're sort of flushing Monday, Tuesday. But there you go for the Russell, the Dow. We already had it. It's pretty damn close. The Nasdaq, it's a bit harder to identify. Let's just say 260 for now. Let's just draw that in so it's there. That's an easy one. 250, yeah. I mean, it'll pretty much go down in tens at least. And the SPY, we already have one. Yeah, I remember this. 340, definitely the next one. So yeah, I'm looking for new lows. That's where we're going, in my opinion. Now the VIX, it went up. Could have gone up a bit more, to be honest. You'd at least expect it to go up to 32, 33 on a day like today, with the markets almost at their lows. But I think come Monday we'll be at 33 on Monday. We're basically at resistance already, just below it, but I think we can go a bit higher. And if we start breaking new lows, yeah, I think it will test its sort of 35 range. So I can move this sort of a bit higher. But yeah, I think we'll be about 33. And then if we take out new lows in the general market's 35, and then you got to watch out, because once you take out 35, honestly, you're going straight to 40, 39. And if you zoom out of that, there is not much in the way of a test of, or maybe we'll stop off very quickly at 48, but it's squeezy time. So watch out. But I think everyone sees this, everyone's seeing the market going down. So very bearish. The DAX, by the way, now that stopped a bit earlier, so it didn't go as low as it should have. So I think on Monday it'll gap down a little bit and basically just hang around testing its lows, waiting for the US markets to open and flush. And once that happens, then I think the DAX will be testing its, under 12,000 basically. And then maybe on Tuesday, it depends what happens in America. But I think on Tuesday it'll be at this zone here, which I've identified quite some time ago. It's like two trend lines intertwining at a certain point. So that's pretty credible for me. So those are the markets. Let's look at yields. The 1 year's just had some malfunction here on this trading view, but basically we're at new highs. Just completely coinciding with the market going down and with the market digesting the NFP and just stating, yep, rates are going up, because it was good news, therefore we can keep raising rates. The 2-year, very close, basically touched its old high. It'll go right through it on Monday. The 5-year, it'll probably touch it at least on Monday, maybe go through it. 10-year, same thing. 30-year, probably go through it. I mean, it's just new highs in yields. Let's look at the European yields, the German, the Italians, same thing. The British are a little lower because of what they've done, but look at all that sort of ammunition they spent, and yields are going back up. You know what I mean? Yields are just the story of the year, going up, just destroying markets. And also, to be honest, not just destroying equities, destroying bonds. Obviously, it's just funny how these 60-40 strategies that have been working all this time are getting obliterated. There's no hedge involved there. People are losing money in bonds and stocks. There's really not much safety except maybe the VIX, which is not the best thing to hold long term. There's a bit of decay and it's not really out, but it's not really correlated that well. I think the best thing to buy really is like an inverse ETF against the market, like the SQQs and all that type of stuff. Otherwise, going short, otherwise holding cash. Short cash, inverse ETFs, or gold's doing quite well, as in it's only down sort of a few percent, and in some currencies it's up. So yeah, let's look at the dollar actually. The dollar, a bit like yields going up now. It might take another 1 or 2 or 3 days to go back up and test its 115 zone, but I think we're going to get there. And to be honest, it could have one very strong day and it's basically there. So dollar back up. Looks like this support held, and with yields going up and the market's going down, I don't see why this trend would break. And the euro US dollar is going back down and the pound is going back down. Complete retracement. Look at this here on the pound, for example, 1.14 flush downward, and then the Bank of England does its thing, which by the way is bearish for the pound long term. But it comes back up, reverses, touches prior support, and now it's on its way back down. Euro US dollar, same thing. $1 zone, 1 unit, whatever you want to call it, zone it was pretty much support and also psychological support. Flush, back up, now back down. I'm not going to do all the currencies, but essentially the dollar's making a move back up. So you can expect these ones against the dollar to test their lows and then break it. Let's look at commodities. Let's look at gold. Gold came back down again. We identified the resistance. I thought gold would come back down. I thought markets come back down. So I'm very happy to see this come back down because I sold a lot of gold and silver stocks, sort of nibbled them on the way up. And so, well, I'll get to that in a second, but basically gold and silver back down. Very nice technical trading there. That was identified, especially on gold. Silver was just a bit crazy. So kind of trading silver by looking at gold. But I wasn't actually in silver. I was in silver stocks. But anyway, silver's been very strong. I said if we get back down to 18, I would buy, and I bought silver stocks in that case. But here now, I think if we go back down to 18.5, it's a buy. Just because it's just been so strong. And I hope it goes even lower. But just sort of drawing an ascending line here against these two. I think by the time we get down here, if we get down here, but I think we will, a very strong support, and I'll be buying just above. I want to make sure I get some, again, not in silver, in the related stocks. So now let's look at those stocks. GDX, GDXJ, very nice resistance identified. Sold this very well. This second resistance, sold the first one, sold the second one even stronger. Very nice. Now we're back at the first resistance. I'm not buying because even though to me it's kind of marked the bottom, I hope it hasn't. I hope it goes even lower. I've got so much ammo to spend on this, but yeah, I'm not going to buy here because I've already sold here. I mean, I could buy back what I sold here just to technically lock in some sort of short profit, if you want to call it that, but I'm going to go for lower. I'm going to go for 23 on the GDX. whilst watching the markets, the dollar, the SPY, the yields, and if I think everything will keep going lower, then why buy early if I think it will keep going lower? I'm greedy on the downside too. But GDX, I think, can go a bit lower. And GDXJ, same thing. I think can go lower, at least on the 30. Well, we're at 30 actually. What am I talking about? At least around 28. Who knows? Let's see if the market can take this down. Because today, we were down hard. Yeah, gold and silver were also down 1%, 2.5%. That's pretty hard. Dollar was up, yields were up, market was down. It's the old trend. So we had a nice crazy move. Let's give some back at least. And if it goes down with the market, we could, if the market really starts to flush, and I think some people are thinking, look, this Elliott Wave 5 part that we're at is really going to take us down fast and hard. And I can see that happen. The SPY goes to 340, 330, 320, and then people start to really freak out. You can see some GDXJ down 8%, even though it doesn't deserve it. And that would be beautiful. I mean, I would lose on the stocks that I'm holding, but I've got about 50% in cash, maybe a bit more now because he might have sold. So I think we can get GDXs lower. That's my point. I'm very happy with my sells, but I sold here, so I'm at least looking for a bit more of a move down. Let's look at crypto finally. Yeah, crypto. I said it 1 or 2 days ago. I said, look, it looks good for the breakout. It broke out. I said, yeah, it should have done more. The markets have done quite a lot. I said, I'll give it one more day. And I said, 20,500 is the zone it needs to take out. It didn't do it. And I basically gave up on it 2 days ago, 1 day ago. I said, it's too little too late. And to be honest, it didn't take out 20,500 either. It was basically perfect resistance. So it kind of failed all tests. Today, I'll say this, though. It wasn't down as much as I would expect it to be. You got the markets down 3% on average, and the Nasdaq 3.8, and this follows the Nasdaq more than anything. And you got Bitcoin down basically 2%. So it's outperforming the Nasdaq on the way down, but underperforming on the way up. It's kind of just dead money. It's not going up. All the markets are going up. Bitcoin, yeah, a little bit. All the markets are crashing. Bitcoin, a little bit, but still following the same trend, but just volumes disappearing. And it's typical in kind of reminds me of these stocks that have crazy swings, like especially moves up and then they lose momentum, lose volume, and then they just come all the way back down. Now, Bitcoin's different. There's just loads of people trading all day, but you know what I mean? There's just a lot less volume. I haven't got the volume bars here, but I'm sure that would, that's what the data would show. So in my opinion, now with the markets going back down, Monday, Tuesday, Wednesday, just new lows. I mean, what do you think is going to happen? Bitcoin's going to turn around and break out 20,500, run to 22,500, 25,000. No, it's just going to maybe go sideways during the weekend because there's no action. And that's what it's kind of been doing the last couple of weekends. Sort of drifting lower. And then maybe Sunday night, just sort of test, let's say, lose 19,000 because it anticipates continuation of market drop, in my opinion. So I think that's what's going to happen, actually. I think it will just sort of drift lower during the weekend. And then Sunday night / Monday morning, sort of pop below 19,000 and basically wait for the US markets to open. And if they open lower and keep flushing, then it should go down. But if it's going to have low volume, I don't know, it might just sort of hold mid 18,000s, upper 18,000s for Monday. But then if the markets really continue dropping Tuesday, then yeah, see you at 17,500. And that's when volume will pick up because that's when everyone's going to push for it to take out 17,500. They want these stops hit. And when the stops get hit, then people will be watching Bitcoin like, oh, it's making new lows. Just like the general market, I think that's when you'll have everything going down. And then you could even have a scenario where Bitcoin is leading the market lower, which we haven't had in some time. And we had that back in the day when it was, sort of flushing this zone here, 30,000. It was sort of going down more than the markets. And then people would think that the markets are going down because of Bitcoin. Obviously, it wasn't true, but I mean, they were all speculative manias. So, they were all bubbles just bursting. But I think you could have well, probably what might be the last flush, but something tells me the general markets are not done flushing for some time. So yeah. So anyway, crypto very bearish. Well, I'm not going to say very bearish, just bearish. Yeah, just interesting to see what happens during the weekend. That's all. However, just before I disappear, I am going to make some videos, some special videos this weekend because I go on holiday next week to Egypt. But also I want to make some general videos. But just before I go, a recap on some of these large caps. I mean, they are getting mushed in the face. Okay, not Peloton, only down 1.5. I just like that. It's quite resilient. I'm looking at that as a potential starter position long term. But some of them, yeah, Peloton and Zoom, I kind of like how demolished they are and they're not really going down much. But still, I'll let the market flush because it will take them down anyway. But I feel like they'll be very good bounce candidates for a swing. But AMD, my God, that's the story of the day. I mean, look at this head and shoulders. So this is left shoulder, big head, right shoulder here, and then took it out on the neckline, and then instantly, yes, we had a bit of a bounce, but instantly just straight back at this 60 zone, even below it. Previous support becomes resistance, although, not really resistance, it just closed at low of day. So, but I'm sure it'll bounce a little bit here, even if the market goes down. It's a hell of a move. 14% down in AMD. This is a serious stock. And if you think about where it was during the COVID, the March 2020 lows, where are we? Yeah, okay, it already spiked before that. But you know what I mean? We're trading around 40, which is not too far away. I mean, it's a hell of a percentage move, but what, that 30% down or something? But look where we've come from. 160 to 60. And we're just getting started on this drop in the market. We're not started, but we're getting to phase two, where the market really flushes. Intel demolished. I mean, amazing for those who don't own it. What is it? 5% dividend yield, very good kind of price to earning. I don't know. There are some good stocks here on sale, and they're going to get cheaper. Nvidia, for example, another good company, a bit like AMD, just crushed. But look at this one; it's at support. If the market's going to keep going down, I think this is, you want to build a position here, go for it. You can buy even where it is now, even though it's going lower. I do think you could get it maybe 115, 116, definitely with what's coming. I mean, look, it closed at low of day at the lows with as a sort of negative sympathy play with AMD, just totally in parallel with AMD. They're going to go lower. And, you could get a bit of a stop loss flush coming along. I would still buy at 116 but where's the next support after 116? Really? It's not obvious. Basically 100. Alibaba, another good one, but look at this chart pattern. Ascending, lost ascending. Okay, this is a good bounce zone. It's true. It's previous support. The market was looking good. It bounced. But now, and this looks like a small bounce, but it's quite good. This is what's really good with the bear market rally. It's like 10% easy. And you've got several days there where it's chopping sideways. You have time to get in and time to make like 5-10%. It hits previous resistance, and now basically, and there's several resistances here. There's this one here from where it was holding during this time. There's this descending line, and it's hit both. Bam, and the market goes down. And now what's going to happen? It's going to visit here, maybe go sideways 1 or 2 days, and then flush. And then it'll flush its all-time low, maybe bounce one day, and then flush to a new low. And that's Alibaba. That's a very good company. Facebook, Meta. I'm not a fan of Facebook, but still, it's a real company. This is not some Chinese fraud. Closed at new lows. Definitely going back down here. I mean, how much of a drops it had? These things are trading like penny stocks. What, 65%? I mean, it's starting to join the list I used to have for like stocks like Teladoc and Zoom and Peloton, and that all have the same stock graph, to be honest, just destroyed 90%. And now you've got companies like Meta and Nvidia and Intel just really looking similar. PayPal's another one. Um, Palantir. There's so many of these that have been basically on my watch list because they're destroyed, but they're getting more destroyed. And it's like more reputable companies are joining this list. I love it. And my plan is just to keep trading the miners because that's where I have my edge. I just sort of know the sector better. I think long term they make more sense. I think I'm able to sleep better at night knowing my money's in there rather than some internet based stock. I prefer resources, especially in this environment. But still some of the proceeds I'm gonna make, I'm gonna keep them for some of these guys because they're not gonna go bankrupt. You know that when the market pivots and they return, they're gonna make crazy bounces, maybe even more than the miners. I mean, short term maybe. So just something I'm keeping my eye on. And also I really like fundamentally, a bit like the resource stocks, I do also like 3D printing quite a lot. I don't know if any of you guys think about that much, but I just feel like that's a way of solving the supply chain issues. But just more importantly, you can print stuff rather than produce it just at such a wasteful degree. And you can recycle. Yeah, you just spare parts. It seems like the future to me, quite obviously. So I know there's more to stocks than just a general idea about the future. It's got to make sense. Each business has to make a profit and all that. And we are in a recession, but basically, I'm starting to consider building my portfolio a bit wider to incorporate these other sectors, to play some of these large caps as swings more aggressively, but also to build more of a 3D sector to my portfolio to match the sort of resource sector I have, using the profits from the resource sector that have been pretty damn good, even whilst they all crash. So really enjoying these swings, looking forward to making more money buying the next drop if I feel like especially the GDXs are gonna bounce. And then yeah, just make more money during the crash, basically. Very exciting stuff. So but watch out, we're gonna make new lows. So good luck. I want to make some more videos. I went on a bit of a rant there, but yeah, new lows coming, so buckle up. But have a good weekend.